Hey guys, welcome back to the channel. In today's video, we're going to be talking about the real estate market, the current state that it is, and is it going to crash, guys? Now, it's a little scary times that we're living in. We're seeing rising rates. We're seeing home values that have skyrocketed over the past couple months and years. Ultimately, there are a lot of things that we're going to get into that could lead to a potential market crash. This is something that a lot of economists are looking at. Also looking from a financial institution standpoint, we have, 10, 20, 30-year mortgages, guys, that are incredibly low when it comes to the interest rate, which are going to be on the books again, 10, 20, 30 years at a incredible low interest rate. As the cost of funds or the cost of goods actually continues to increase, it's going to be interesting to see exactly what happens. Now, looking back to 2008, when we seen the market crash, I don't think it's going to be quite as deep of a market crash. Now, market crash was 40 to 50% of the price, but in turn, guys, the U.S. median stock, the price of homes right now has jumped nearly 40%. Now, take a minute to kind of digest that. 40% increase in the value of homes, which means that it is making the homes incredibly more expensive to purchase. Now, you combine that with what we've seen of this year, 2022, with the increase in the rates. Now you have skyrocketed home prices, and you also do have very, very high rates that have literally doubled within the last 6 months. Now, coupled with this, you also do have the rising prices as we see inflation increase, the GDP kind of going negative. So growth is not really there, but as fuel was more expensive, food was more expensive, all of the things were essentially more expensive. It started taking up a majority of the income that people were essentially living off of or trying to survive on, coupled with the higher prices. Now, when you're looking to buy a home, guys, again, you're paying a much higher interest rate. You're also paying a much higher price tag, which means there's going to be a tipping point where one of those two things do have to change. So mortgage rates, interest rates, what really to expect? We're expecting within the next couple months, probably 6 to 12 months, we're going to see home prices drop. So again, we've seen a 40, some places 50% increase in the value in the cost of homes. We're going to see, honestly, and again, not financial advice, but really thinking about it, probably a 20 to 30% decline in the prices. So what does that mean as a consumer? Right now, guys, a lot of people are looking at fixed rate home equities, getting equity out of their property right now before those values start going down and they really squeeze the ability to borrow. In addition, guys, with a fixed rate home equity, you can actually borrow against the equity of your house at a set rate. So as we do continue to see interest rates rise, you can lock in that rate for 10 years, 15 years, 5 years, whatever it may be, to make sure that you can cover the costs that are coming up in the next couple of years. Now, what do the experts say? Now, experts are saying, guys, that it is going to be a possible market crash. They're looking possibly July of next year, but they are kind of split, almost 50-50. Some are saying it's not going to be a very deep recession because businesses are doing good. A lot of companies are very cash heavy. Other side of it says it's going to be the 2008 housing crisis all over again, where we see prices drop 40 to 50%. But honestly, with the split between them, guys, it is really unknown at this time exactly what it's going to happen and how far the prices are going to fall. Again, from what I've read, 20-30% reduction in prices, bring them back to kind of realistic prices is what we're thinking. Is it going to be a 20%, 30%? Again, it really depends on your market and exactly where you're at. So currently, as today, we've seen about a 5% to 10% reduction in prices already. Again, as the rates continue to rise, homes are more expensive. So when you look at a $500,000 house at 3%, then you're looking at a $500,000 house at 6%. The price is absolutely incredibly more expensive. You're talking $500 to $600 extra per month just to afford the exact same house that it would have been 6 months ago. So what are some of the some of the profits. You've seen The Big Short. If you've ever seen the movie, it is very, very cool. So a lot of people are looking at the inverted real estate. Some people are looking at a lot of different aspects to kind of make money from a downturning time. Also, a lot of people are looking at rental properties, real estate properties, investment properties, things of that nature, guys. So if the values continue to drop, once they get to a certain point, people who are looking to get into the housing market but did not have an opportunity because the values were so high will now have an entrance in there. All right, guys, so that'll do it for today's video. Again, just a quick insight, guys. It looks like over the next 6 to 12 months, we could see a 20 to 30% decline within the housing market. As rates continue to increase, money is more expensive to go ahead and borrow. You'll see that anything that is variable, guys, because of, again, the rising interest rate environment is going to increase. It's going to get more expensive to borrow money, which in turn leads a lot of people not to borrow or maybe not to buy as big of purchases as they normally would. So in conclusion, guys, again, housing prices are coming down, interest rates are going up. We have to see exactly where it's going to land, how much the housing market is going to essentially accept when it goes to the downside, how far they're going to go down before it is not worth it. Refinance business or refinance market is pretty much gone at this point. If you didn't refinance in the last 2 years, the rates are too high now that you're not going to be saving a lot of money. So guys, that'll do it again for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.